Good morning, everyone. This is Rose. Today is Wednesday, May 8th, 2 minutes after 9 a.m. Eastern Time. Good morning. Okay, let's begin. We had a little bit of sell-off from a very tight trading range on pre-market. Can you guys just give me a second? Just need to move something there quick. Hold on. Okay. Let's take a look at the 15-minute Globex chart from yesterday. Actually, a couple of days. We have been long, bullish, and as you can see, when market is this bullish, you don't expect right away buying. You want to see a two-legged move down, some kind of a move, 2 or 3 legs down. And the market is trapped sellers and then go right back up and test the prior highs and possibly break above and continue to go high. And you can see even here is we go up small sideways down and then trap and go. And here it is. We've been up, but look at the breakouts. It's kind of leveling. It started to level. And we do have a very condensed head and shoulders pattern here. Left shoulder head, very complex. Right shoulder, double top lower high or double top, another lower high. So market actually created a very strong bear flag that the channel lasted more than 40 bars. And it comes down, right? So you can actually measure this leg and project it down. I think this leg is a lot larger than this leg. However, this area is a major support. We could come down a little bit more because the buying actually started in this area. So at the open, who knows, we might just come down a little bit, maybe make some kind of a wedge bottom, spike channel, and then everybody else is selling thinking this is a bear flag, and then we trap everybody, and then we go right back up. So we could get this today. So at the open, even though we're going to gap down, selling might last only a few bars or 6 bars, 10 bars, but we're probably going to reverse back up because this is a strong balance zone. It started a strong leg, went up, and then continue to go up with a next. I mean, look at this, right? So count began again for a wedge top. You got a wedge top here, here 1, 2, 3, and then we have another breakout. So count begins. So you got a 1, 2, complex 3, or 1, pull back 2, pull back 3. And then count begins again, 1, pull back 2, pull back 3, but that's it. So we have a gap here. We went up and tested the gap, came back down. You don't really trade this. This is Asia into a London session. And an Asia into London session, Asia being always a balance zone, tight trading range, it's going to have a manipulation around above and around the trading range, above and below the trading range. So you can see that at the open London session, we have a very quick manipulation. Goes back up, manipulates again, and then it comes back down. This is why we say breakouts will fail. Most likely we will pull back into the trading range, might test the opposite sides. So I generally find a trading range midpoint and see what the market is doing. If there are no consecutive bull closes, then I'm looking for consecutive bear closes. I got 2 consecutive bear closes, even here. Many already started to sell there, or sold here, And then you got a measured move, a smaller measured move, the size of this right here. Right, then it extended, possibly right there, right? Or you can say, I'm going to take that as my measured move, which is fine, but you have extended it 3 times already. So you have to look left, is what's there. Is there some kind of a gap there? If you have a strong buying, the starting of the buying area is not the area I look for when market is coming into that. I look for a gap such as this right here. There's a gap right there. So if I actually extend that, there's a gap right there. And look what we just tested right there. Test the gap is we go right back up. So the market now wants to test the first bear gap area. Most likely sellers sitting there. Sellers want a double top with this doji high. Bulls want to continue to go up here, maybe somewhere at the high of this bar or a little bit here. Go and test and then come back down. So we might actually make a wedge bear flag, come back down, maybe have a double bottom and then reverse. And we'll see. Or we're just going to have a double top here and then start to come down. Can we get a actually V-shaped reversal, a sharp reversal? Rejection. If that's the case, it's going to be an interesting day. That could create a small pullback bull trend. So how would that work? If we get a sharp reversal, market starts to make a spike and then starts to grind up, right? So how do you buy this? You buy the shallow pullbacks. And then how about the deep pullbacks? Well, find these levels and look for deep pullbacks, maybe even comes down, but it's going to reverse and go right back up. So if we get a situation like this, I'm going to be looking for some kind of a bull trend with shallow pullbacks. I'll buy them. But in the meantime, I also look for deeper pullbacks. If we just go up here, make a maybe a wedge bear flag, I'll look for a sell, but as long as we do not take out these lows, I'm also going to look for a reversal, okay, to trap the bears and then reverse back up. We would reverse right into this doji, and then that's where the early sellers would be sitting. But the market also could have a pullback and then continue to go higher into this area. So why is that area important? Well, first of all, that is some kind of a triangle apex. So is the Asia key level called the green is midnight open for US, and then the Asia mid. That area becomes an interest for bulls. But this area is going to act as a major bear zone. So if we do go there with several legs, I'm going to look for a double top and a sell back down, but then I'm going to see if we can actually trap the bears and then go right back up to that level. What about the bears? Can we actually keep selling this? We could, and at the open we might, but right around here, we might actually reverse back up. Try to see what today can do. Head and shoulders patterns are actually reversal patterns, and some say, oh, they're breakout patterns. Not necessarily. Smart traders actually, they might sell, but they're always looking for a support area, and then they're looking to buy when everybody else is looking to sell. That's why this area we can actually trap the bears. When they're actually selling, we can run their stops, and then the market would actually get a nice bullish momentum up if they can run some bear stops. But right now it's very bearish, but look at that doji. So we might actually come down and make a double bottom if this area holds. If it doesn't hold, let's see, maybe this area we might test and then reverse back up. We'll see. On the daily, I start with the Globex, but daily, reason why yesterday we ended up selling at the end of the day and then try to reverse back up to the open of the day it's because we hit a gap area, and you can see right there this gap is, but there's another gap right here. Market is probably wanting to get back there, but first the bulls need to close this gap. So that means we need to have a day that's overlapping with this gap to buy the pullback and then goes further up. Now we have a really nice, I don't know what they call this. They used to call this I don't know, Morning Star, Midnight Star, I don't know, Sailor's North Star. Anyhow, well, this is kind of a sell signal, but or some kind of an area hit. So we might actually, what if we get a bear day today? Well, if we do get a bear there, that'll be a pullback, but the buyers will be waiting in this gap area. Okay, so we might get that, and then we might actually go right back up. So really strong bunch of days gapping up. So you can see that this ended up, you see this gap, you see this trap right here? This is a trap, kind of a trap that I'm talking about on the 15-minute chart. So you can see that market failed to sell. Bears tried once and tried twice, and the first time they tried, signs are there that the second time is going to fail. And they failed, so it's really nice buy. You can buy above that trap right there. So I generally double this amount to the upside. And then possible measured move to the upside. I don't think I would get this, but I would definitely measure this distance and project it up. Just to be, because if the bulls do show up and we start to close a bull bar like that, they're going to buy the pullback most likely. Stop underneath, and they're going to try to go 1-to-1 or prior highs further up. We'll see. There's another small gap, but it's just too tiny, too insignificant. So we might actually very close this. But right now we're getting a rejection, and right now we are about 6 points below 5,200 round number, and I've been saying we're going to keep going back and retest that 5,200. But I think the market is trying to get to the 5,300, so we might get a pullback and another leg up. I mean, bulls are doing pretty fantastic here. This is a bull flag, 1, 2, 3 wedge bull flag. Problem here is that for bears, bulls actually close this gap. So these gaps will play a role as buy zones if we do have a deep pullback. One problem for bulls is that 20 EMA moved underneath 50 SMA. So we have to pull back and then if we find buyers maybe in that gap area, we go up, and then that would drag the EMA, 20 EMA above the SMA. That would make us bullish once again. Then the market would buy the next pullback. So yeah, that is possible. What about bears? Can they actually use this opportunity and sell? Well, here's a problem. I think years and decades ago a similar thing happened. I think it was in the like 60s or something. I read an article over the weekend, exact same pattern. Everybody else is bullish. Suddenly, we start to get very strong bear days, and then market starts to tank and goes into, there is a area here that's important, but this is the one that I'm eyeing, which is underneath. We could get down there, we could bounce, and then we could continue to come down. So decades ago, a similar thing has happened, and for bears, they really have to need some kind of a catalyst. I don't know what that catalyst is. This week is Fed week, so I'd be careful. Today especially, we have 11 o'clock Philip Jefferson scheduled, 11:45 Susan Collins scheduled, Lisa Cook is 1:30 p.m. There's a 10-year note auction at 1 p.m., so you guys need to pay attention to it. Yeah, I mean, is war news. Some kind of a peace deal was happening down in the Middle East, and then things just went down the drain. So I don't know what they're doing over there, but we got enough catalyst that market can do anything. And if bears want to sell, I would like to see some kind of a distribution, right? So what is that distribution? Let me tell you, this is very simple. Trading is all about finding a trading range, maybe after this is market cycle, L's market cycle, right, that we all studied. So after a strong kind of trend, market goes into sideways. Everybody likes a quick reversal down or breakout, but it doesn't happen very quickly. Market goes up, down, up, right? And this is where I decide where it's going to go. That means this is a trend markup, this is accumulation, trading range, manipulation around the trading range. You wait, many smart traders wait for these manipulations to take place. Like this is a manipulation. This right here is manipulation, right? This right here is manipulation. Everybody else is buying, but you have to wait for a pullback. Then if we are above the 50%, then the distribution begins. Sometimes it goes up, comes back down, and then continues again. That's a deep pullback. Like for example here, right? Another one goes up, right? So, and distribution is going to happen, which is a breakout, okay, phase that we call, could happen in several legs. You can apply this to a 60-minute chart, a daily chart, a weekly chart, a 5-minute chart, even 1,000 tick chart. You can apply. You can even apply to 30-second charts. So here is a trend phase goes into a trading range, right? A quick manipulation, continuation, manipulation, comes back down. Try to distribute it, but that's actually manipulation. It failed. Comes back down. So now, actually, you have a trading range with manipulation, now with manipulation, right? So you're still in the trading range. It's going right back to the 50%. Hasn't really decided when to distribute. This is not distribution. Okay, if we get above it and we start to go long, that's great, but be prepared as you're buying. If you don't take profits, you're going to be facing a deep pullback, and then the second part of the distribution begins, which is the breakout, second part of the breakout. What if we go up here and then start to distribute from there? Yes, then we would get a really nice rounded top or wedge top, lower high, bear flag, and we could keep selling, right? So we're already selling. We're at 51.93. So we're going to open up in here. So distribution already began. The breakout began, right? So the bears, breakout for the bears began. But, so that's a breakout, right? But what could happen here? We could go into trading range. We're going to, manipulate. Then you're going to look for either reversal or continuation down. So we are right now going into some kind of a trading range. Let's take a look at the ETH. And you can see it right here. This is a 60-minute chart, right? So market is in a very steep bull trend here. We're testing. It's kind of like a wedgie. So we're testing those areas. I mark these areas. These are something happened in these areas that are very strong that I use, like here, a lot of selling when the market gets there, probably sellers waiting. There were buyers, so as we're probably going to test this area before bouncing into that area. If this area bounces, but then sellers are strong again, then we're going to come down and test this area. So that's going to put us into some kind of a sideways and up, possibly come down, or we're just going to demolish this. Because any head and shoulders pattern, whether it's inverse or regular, can fail. Look, there's a head and shoulders right here. It actually sold. That was the neckline. Bears took out the neckline. That's when you know the head and shoulders pattern is not going to get invalidated. In fact, it's going to expand down. You can look for a measured move or 2 times the measured move targets, right? But that is when the neckline fails, which we saw an example on Monday, I believe. When the neckline fails and the bears cannot take it, it's going to go and invalidate. It's going to take out the head and shoulders head, top of the head, and then it's going to break out to the upside. That's when you know that wedge is reversing and failing instead of is actually reversing and breaking down. So what can happen here? Well, we had a neckline here. Well, although I'm not so sure about this. Maybe that's a double top and neckline. We broke it, so we're probably going to get a sideways and up, and that'll be a bear flag. We will come back down. There's a bear flag here, there's a bear flag here, we might get another bear flag, but after 3 bear flags, we go sideways and then up. So I want to see actually market come down and test this area, and that is around 51.84.85 area. So market could continue to come down only to reverse somewhere here. Let me put that on this chart. No, it's right here. Okay. 60-minute chart, I've been saying since last week, is before the week closed and over the weekend, I said, please don't sell. This is going to trap all the bears. We are going to go reverse back up. The first reversal is going to be right around here. We're going to test this area, but I'm more interested in bulls trying to close this gap. So we might actually try to get above and maybe go up to here. That is a target, but I don't just blindly buy and expect market to go there. So we were on our way, we were going up, but you see this very climactic bull channel is, well, it's not really climactic, but it is very steep. That's your leg 1, leg 2, leg 3. So you got a wedge there, parabolic, and then gets a deep pullback, but anybody who sells a bar like this will be trapped because market always wants to go back and test the highs. Now, can market come down? This is RTH, by the way. Well, it has been coming down, so this ended up becoming a bear flag. So we are somewhere down here, is just about EMA. We're about to test the EMA. We might have already tested pre-market, but we're probably going to retest it. So that will be leg 1 pullback. Leg 2, we might bounce and then get a leg 3 and then go sideways and trap, and maybe we could reverse finally. Or we're just going to get 2 legs down and then we're going to trap the bears at the EMA and we're going to reverse. We'll see. If bears continue to sell, then the last week's higher range is going to be target, which is on my 5-minute chart. I already marked the 5-minute chart. So it's high of day, so low of day. I got April high there, and then last week's high. Last week's midpoint is a little bit under the last week's midpoint, just about it's 9 or 10 point lower, maybe even just about 9 point. Is mid-April. I didn't mark it, but that's where it's there. Open of the month, last week's low, April low. So if we do a deep pullback, that'll be between the open of the week and then last week's high. So we are already somewhere here. 1 hour EMA is a magnet at the open, most likely, or we're just gonna come down a couple of bars and then immediately start to reverse back up. That could happen too. So today could be, let me see, I already reversed here and then came down. I'm gonna look for this area and then see if we can reverse from here without coming down too much. This is a tight trading range, balance zone, therefore it's area of interest. If the bears do sell, bulls are waiting here. Okay, so, and we could do a 2 test, and the second test we could buy and swing high. I'd be only selling this even further down if bears, if there are no buy orders there that's strong enough, and then we move underneath this area. I'm gonna try to tighten this up. Just about, and I'm going to mark the half of that. Okay. So I'm eyeing this area. If market continues to come down at the open, I'm going to be looking to buy around here. Okay. Let's talk about yesterday. I don't know if you guys remember, but Monday is, I mean, yesterday is very similar to Monday, except that we ended up having a bullish version of it. I was describing this. I don't know if you guys remember me describing several options at the open, what today can do. And I said, I'm looking for a trap is, remember right here is, I said, if we can actually hold is, which was right around here, is without separating. I'm going to look for market to go back up, is make a quick high and the trap and sell. Okay. Now that actually happened yesterday. See right there? Is they trapped the bears and the bulls bought it. It ended up becoming a double bottom bull flag, but it failed to break out. Then it quickly came down. Have you noticed when the swing began? Bar 48, which is 1:30 p.m. Bar 48 to 50. I look for these swings if those swings don't start around midday. You got a bull swing and a bear swing, so you got a measured move down now. So yet the day before is, I said this day has a bearish version and a bullish version. And then is, if it's a bullish version, we might actually come down and close at the EMA. But it started is a lot earlier. Buying started a lot before midday. So we did actually come down to the EMA, but that ended up becoming a bull flag. So you see a strong bull bars closing, stacking. That's buy to close, and the buy to close starts around 3:30 p.m. ish. Okay, it's going to probably last. I like it. I like a good sell to close or buy to close market around 3 o'clock to begin. But sometimes if you get them 2:30 with bar 60, then you're gonna get another swing around 3:30 p.m. So we got the bar 60 2:30 swing, several legs down, but it wasn't really all that great. Ended up becoming a bull channel, bull flag channel, in a bear channel fashion, but it was a bull flag. And then the market just bounced. So that's your 3:30 swing right there, buy to close. If the sell to close or buy to close around bar 60 2:30 is not really sell to close or buy to close setup, it's just the grinding down, then around 3:30 you're probably going to get some kind of a buy to close or sell to close kind of trend. So we got these trend, sell to close trend started 1:30 this time. So sometime around bar 60 2:30 you're going to get a reversal, but it's not going to be buy to close. Okay, it's just going to grind up, but it's probably a reversal. So those are the things that I have studied in encyclopedia over the years. Before encyclopedia, I didn't know anything about it, so I was studying RTA charts regularly anyhow. But when I found out about encyclopedia, I was like, oh my gosh, this is genius. I don't have to do extra work here. Everything's organized. So all I have to just get used to the parts and how they're marked, and I can just find my way around because Albert's already done the work for me. So I still study because you got to keep the mind sharp, right? Any dual knife is not going to cut well. And if you want to succeed in this business, you have to stay sharp. That means pattern recognition. Because RTA chart is a pattern on its own, okay? Market, by the way, started, but I want to finish my thought. Think of this RTA chart, 81 bars or 80 bars, okay, as a pattern on its own. If you recognize these patterns, you can even tell what the next day could do. Okay, so anyway, we have a huge gap down, and the market might come down and test these yesterday's 3R opening range, 3R, which it left behind. I don't know how this bar is going to close. It's just too early to say. If you buy right now hoping a quick, clean reversal, if the bar closes and you get a second bar, then you have a bull trend at the open. But you buy right now and this collapses, or the next bar comes down, we could come down and test here, we could come down and test here. But right now it's a very strong bull bar. It is trying to go up to 51.98. Probably some sellers might be there. Or 5,200. I'd like to see market actually come down and test this area. We have a wide Globex range here. We have a, I don't know what this is going to, but it could be up and then down and up again and then come back down. It could become a bear flag. So somewhere around 51.98, 99, 5,200, there could be some sellers there. It's just too low to sell, probably. Nobody wanted to sell, or anybody who sold pre-market taking profit. But is this good enough to get us all the way up to here? I would like to see a second bull bar. Am I lagging? Yeah, I am. So let me try this again. Thank you. Just reset the connection. Just waiting for it to. Okay, so I'll follow along. Bar 2 is already a bull bar, but how is it going to close? The bar 1 has a very prominent upper wick, but it's a really good close. If the bulls close bar 2 on its high, taking out the bar 1's upper wick, that's a good sign, good momentum. But if they fail and then they go halfway up the upper wick of bar 1, not able to close a strong bull body, that could be exhaustion. I'm just waiting for. Okay, bar 2 is already going above the bar 1 high, so that's good news for bulls, but they have to close it like that. As bullish as possible. Here we go. So we're probably going to go test that. We are already testing 51.98, like I said, that we would test, but it could actually accelerate and go into 99 and 5,200. Probably some sellers waiting up there. And I'm afraid if this bar closes bearish, next couple of bars could actually come down and test the bar 1 low. And it could be, they could be bear bars. And we could test the bar 1 low, and anybody who bought the bar 1 would buy underneath bar 1 once again. So let me show you guys an example of that. Gap down. We get something like this. We could come back down, and then the buyers would show up. It would be really nice to come in here, but I don't know how this is going to pan out. There's still 1 minute and 13 seconds. Or we're going to get this pull back and then we're going to reach we're way too far away from the EMA, is huge gap down. So I need to see some average price. Let's see, where is that average price for bears to sell? If they're disagreeing that this is just too low to sell, so they rather look for a pullback. Where will be your average price? So you take about 2 bars from here and then 18 bars from here, and that will be your 20 bar range is midpoint, would be an average price, whichever comes first, whether by the time we get there if the EMA hangs out up there and not catch up, then this is your average price. There will be sellers waiting here. But if the EMA catches up, then use the EMA, you don't need this measurement. But that is the average price for bears as early as right here, but I don't think anyone's going to sell here. They might, but somewhere between here and here is average price, and they might actually try to sell. Okay, 2 bull bars, closing first one, I mean, one of them has to close really better than the other one, and it did. That's bar 2. But I want you guys to notice bar 1 and 2 still overlapping. Okay, is when they overlap like that, that's really not excellent, trend from the open kind of setup, because is majority of the bars are overlapping. Bears are also selling, and they're looking for a good place to sell. Maybe they were already selling, so they're trying to sell, but I probably won't sell here. But we did reach the 98, 99 area. There is a little bit more room to the upside. I think it would be better for bulls to use it as a pullback and then go right back up again. But what about bears? If they sell strongly here, what could happen? Well, they're gonna want to come down all the way to the bar 1 low. Their goal was to get down to here. This was being too low. If they think that this is good enough to sell, they might sell. So I like to wait a little bit before I do anything, just to see what the market is going to do, because to me the first 2 bars is not enough for me to make any kind of decision, because bar 1 and 2 in reality are overlapping, even though bar 2 closed very strongly. Probably some buyers underneath bar 2 at the open or the lower third, or underneath bar 2 waiting. So is because many did buy above bar 1 and they're stuck, so they buy. They're trying to get back to safety, meaning break even. And if they get their break even and then this bar actually collapses and closes bearish, then they will exit and the bears can take over. So how this bar closes is important. Is it lagging again? No, that must be an old post. All good, thank you. News-wise, we have, today's Wednesday, so we have oil report is 11 o'clock news. 10 o'clock, you should always assume market is going to get a little bit volatile, because that's what the machines are programmed to do, something at 10 with the close of bar 6. But the biggest news is oil sometimes does affect the move of S&P, but it's very rare, I think. So you really have to pay attention to 11 a.m. news. Oh, sorry, there's wholesale inventories at 10 a.m. I forgot about that. So we do have a good news here. Yeah, 10 o'clock. Tomorrow we have jobless claims, 8:30. 30-year bond auction tomorrow, 1 p.m. That's going to be a big market mover event. Even if it's a 1 bar, it's going to be a 1 violent bar. We had this before, and people never expected such a big move. We can get a big move at 1 p.m. tomorrow, so keep an eye on that. And then Friday is going to be jam-packed with Fed members, and then you got the Treasury statement at 2 p.m. So we're going to have Yellen talking. Consumer sentiment 10 a.m. on Friday. That's a big deal. Yeah, big day in the history today. 2 bull bars. Let me put this down here now. That's our open of the day. Market is trying to reach the bar 61 lows probably, which is where currently the average price is. So bar 3 now is a pullback. It's very weak. And I said that it's important how it closes. So that's basically leg 1 pullback. We're in leg 2 now. If we get a good close here with a bull bar, we might get another quick pullback, but the market will continue to go higher probably. So you have an outside bar followed by an inside bar with bar 2 and bar 3. 1 hour measured from the inside bar is about 14 ticks up from the high of bar 3. Is therefore your target is 0225.02 area. So 0225.02 is where there will be probably some scalping. We're going to test that maybe 1 tick above. If we do close a bull bar, we will accelerate another 14 ticks. So total of 28 ticks is possible. So we would go test around 52.05 area. You should be taking profit right here if you bought above bar 3 since it's a high one from the lows. How old am I? You're going to have to liquor me up to get that kind of information out of me. So who's buying the drinks? It's not Friday. Try Friday. Maybe I'd be in a different head space and reveal you all of my secrets. I am not talking about that. But I know he's not asking my age though, so he's just talking about an important day in the history. Just waiting. That's not really a 1 tick failure. That's actually 2 tick failure because the target is actually 0225. Let's see if the bulls can actually push this. It's probably going to go and test 1 tick above 0225. So the target is actually 0250. I'll mark it, but I normally take profit way before that is hit. Okay, I just scalped here, but holding a runner. Excellent. Seeing a runner on other accounts, and I'm looking for market to get to 52.05. But it might actually go a couple of ticks above because the average price is right there, so I'm still holding. Can you guys stop with this math? You're going to make me talk. And under pressure, I might actually talk. I'd sing like a bird. I would never be a good spy, nor should be tasked to hold any kind of treasure maps or government information. Like I would talk right away. So maybe in 10 minutes I'll reveal you my age, but not right now. Somebody's trying to do the math here. Anyway, I did scalp. I'm looking for follow through. It might come down a little bit because it is the second leg up. But I think market wants to go and test the 61 low. It's turning out to be a good place for bulls to reach. We might actually get a wedge top now towards the EMA. Bears probably want to keep the gap open to EMA, but I think this place is a good place, so I'm going to hold my runner. Yeah, I plan on retiring in a couple of years for sure. I just, every time I say that, I add another year and another year. Because then, I want to have all sorts of toys and they all cost money. We'll see. It's a good, actually, goal, right? As a trader, you want to retire early. But the problem with the trading is that you are never retired because it's kind of addictive, right? So you just want to trade every day. I don't think we will ever retire. That's the bad news. I'm not hearing anything. The financial news is, I don't know, they're pretty quiet today. But there's still 7 minutes or 6.5 minutes to the news wholesale inventories here. Maybe somebody just starts to talk in a minute. But no, I don't hear anything, Ari. Weird enough. Weird enough. Market is making its way. I'm still holding, but 10 o'clock is approaching. Ding. We might need to come down maybe like a couple of points here, but there's nothing. It's a good follow through bar. Okay, so we might need to go up but then we might come down 3-4 points, maybe 5 points. We got a micro double top with 4 and 5 right now. Maybe we pull back right now, right here. And it's an inside bar also. We've gotten very close to the 61 low, but the inside bar is not a bear bar. So there are probably buyers down below waiting. Okay, so you got a new outside inside combo. Bar 4 is an outside bar and bar 5 is an inside bar. We might need to come down a little bit here because market moved about 15 points here. That's a good place to scalp, but the pullback could be weak, and then market could continue to go higher. So this is the second leg. After also needs a pullback. But if we take out the bar 5 high, then bulls will move their stop somewhere underneath 5 or a little bit lower. So we just moved above. All right, so no pullback at all. So this was the pullback. So that's basically is high 1, high 2, possibly high 3. This is a pullback and close, so high 1, and another pullback. So that's high 2 above 3, high 3 above 5. I still expect some kind of a pullback, by the way. I still expect some kind of a pullback, by the way. But if the bar 6 closes on its side, no one's going to sell. It's going to go another probably good 5-6 points up. But if it closes bearish, then this is the problem right here because it's a profit-taking area. But probably buyers waiting down somewhere here. I did say that we would go and test the 5205. We kind of didn't tag it. It's kind of a bummer, but we might quickly do so because 10 o'clock is approaching. We might actually get that 28 tick rewards from above bar 3. It is the inside bar, and that is 0575. 0575 is the 28 ticks from above. Reward that I called is from above bar 3. But if the bears actually close a bear bar here underneath bar 5, then they're going to bring market down to 98.75 or somewhere underneath 5 half R and then reverse right back up again. So this is the target right here, 28 ticks. Looking to see bulls actually complete this job. Question here, how bar 4 would be is outside bar? I think that's what you're saying, right? Well, I'm going to let you answer this question. Now look closely. What do you see between the 4 and 5? Do you see how 5 is an inside bar? Its high is exactly identical of 4, but it's actually encapsulated by 4, so that makes bar 4 outside bar. Hello, Troy. Welcome. Troy says, I'm a newbie, 64% finished with course. So apologize if this is a dumb question. Yeah, we don't like dumb questions, so you might want to filter. I'm just kidding. Any question is a good question. There's no such thing dumb question. We all ask them. Believe me, I still ask questions. And I don't care what people think of me, so you shouldn't even think. Did you go along on bar 3 high 1? Yes, I did, actually. Is the way that it closed, and I was explaining, the way that this bar actually closes is very important, I said, and so therefore, if it doesn't close bearish, then we're definitely not coming down to the bar 1 lows. It closed, it came down, went up, so it's an inside bar and a pullback, and it's a follow through. Everyone's going to put their stuff underneath 3, and they're going to go, so I generally measure that and go with conservative targets, so 1R, 2R. So 2R is right around there. That's what I expect. If we close a bull bar, then we will get to the 3R. But now we have an outside inside. You can also measure from here just to be accurate. You don't need to hold 0575. This is your new 1R, and we could actually get to the 2R right there. So it's working out pretty good, but you should always take profit. So we just met my target. I'm just going to get rid of that now. EMA is magnet. We have breached 61 low. That's great. So EMA is target. What about bulls? Can we just keep going? Oh, yeah. I mean, if we actually close above the EMA today with 2 consecutive bars, next couple of, 10 minutes, next couple of bars, the first pullback I'm going to buy, and I'm going to look for a good buy signal bar. Most of its body above the EMA. I'm going to buy that, and I'm going to target the that high and then high of yesterday. And we're probably going to go and test it only if we get above EMA. So we are already always in long, but it's not officially always in long because we don't have 2 consecutive bull bars above the EMA closing yet. So you have to take profit because bear's goal is to stop this leg 1 pullback, leg 2 pullback, and cut the leg 3 short, or even keep the gap open to EMA and reverse it back down. But we got a breakout and a good follow through. So this is probably a pullback. Yeah, it could be a little bit deep, but when I say deep, I think the buyers are waiting at the open and underneath bar 6. I would not be so excited about selling anything here. This is trying to get a 20 point, y'all. So it's trying to get to the 20 point. Hold on, let me measure that. Actually, this is, yeah, you can measure 19, 20 points. So 19 would get there and 20 is around 11.25. But I would actually measure on the ETH. Right, the buying actually began right there. So I would actually measure from this bar. So we are 18, market is trying to go test the 20, but the profit taking could begin 1 point below 20, so starting at 19. So even though this looks like it wants to sell right now, they can trap you. So I'd be careful here because that's where it's trying to go. Okay. I just want to show you how I would measure, and that is 0875. If you measure from this low on the RTH, then we can even reach right there, 1025. I don't know. At the open, I like to measure from ETH. So I'm going to keep that in mind. But it could go another 2 points on the RTH. So I wouldn't sell here. That's what I'm trying to say. I'm practicing my Southern accent. I want to move down there. So I can't be people putting, oh yeah, we got one from Jersey. That's a Jersey girl. So I'm trying to get rid of my Jersey accent, my fake Jersey accent. No, it goes very fast when I'm arguing with someone. Oh man, it was, oh, you're from Jersey, aren't you? I'm like, yeah. That comes out very fast. And then my Turkish accent will come out very strongly after right around midnight when I'm very tired, super tired. Oh, you're going to be hearing a very thick Turkish accent. I don't know how that comes back up surfaces. I have no idea. But it's just, I guess it's the brain, how it functions. New Jersey is very expensive. This is whole tri-state, and I call it hellhole. New Jersey, Connecticut, and the New York area is extremely expensive. People are actually moving to Delaware and getting big lands and building homes. And then you go south a little bit, you get more land. Taxes are high. When I first moved to New Jersey back in 1997, New Jersey was so proud of having the lowest sales tax. And back then it was a much better state. I think it's now very difficult. Real estate is extremely expensive. You cannot even find a decent home for $1 million. It's just, it has to be. You have to spend another $300,000 just to get it up to date. It's nothing but dump. It's really bad. And you get no land, basically. It's just expensive. Yeah, that's where I'm eyeing, around Charleston. And I want to go down to Florida, but other people in my life, they don't want to move down there. So we'll see. Somewhere I can, grow vegetables all year long, fruits and vegetables, without freezing myself in the cold weather. So I thought maybe Charleston is a good place. I don't know. We'll see. That's my retirement plan. And somewhere I can do boating. If market gives us these 10, 20 points and my follow through targets like this, yeah, it'll become a reality. Let's probably support somewhere here. Bar 7 is not a good sell signal bar. So it might probably get a couple of points from underneath is 7, but I would be careful here. You have to get a really strong bear bar. And you gotta, we don't need this anymore, kind of lived its purpose. We have a channel line, we're breaking, probably buyers waiting. So we're testing 7 low. There is also support right here. What if we dip all the way into this gap? Yeah, buyers are waiting here. So we might get a couple of points, but I don't think we're going to get a clean reversal. So there's a 20-point target up here, somewhere around where is it? If I measure from here. 20 point is 1150. And then for these guys, that's 875. But we are not always in long. Although some will argue that this is always in long, but we are not officially always in long. So the bears who have been selling, they want to keep the market, prevent the market breaking this area and continue to go into that apex of the triangle that I marked. Remember? I said there's an apex of triangle, so this Asia key level on the Globex chart, although this is 15 minutes, so let me go back, is the target, the pre-market I was saying. So this is the area where the bulls want to go, but it's not going to be that easy. We might need to pull back a little bit. Now, you see this gap right here? I call this a double gap. See this double gap area you got a bear gap here. So normally they're supposed to sell there. They failed. So what do the bulls do here? So they are actually, the gap is right here. Where's my grammar today? I'm too excited about. Here, I'm going to measure from here to here. This is the gap. Bears should have sold here, but the bulls closed the gap. So now you have another gap. So this time you have a bull gap. right? So I don't have a top yet, so that gap is from here to here. But this bar closes, say it closes like that, that's the gap. We might come back down again, but somewhere here the buyer is waiting. So what could happen then is I'm going to look to buy again. When I see these double gaps and one of them is rejecting, I look to buy. That creates a really nice cup, handle, and a measured move up kind of pattern. So you see some bulls are buying already because they're disappointed. They probably bought above the last time, one tick above bar 6. They're buying the close of bar 8 is a good sign. They're trying to get back up to one tick above bar 6 where they entered. If they actually close a bull bar one tick above bar 6, not only they're going to start making money with their original entry, they will also get a confirmation the market should go higher, but it has to close bullish. If it doesn't close bullish, then the market will come down maybe a couple more bars, okay? But still, this area is a bull gap, and the buyer's probably waiting. The first bull gap would be something like that. I would look for some buyers here. There is a bad buy signal bar here, but they bought above it anyway. On the 15-minute, the deepest pullback would be towards to this gap area, but the buyers will be there and probably want to keep this gap open, even if we get a deep pullback. So basically, we could be forming a cup and handle here, unless it changes and suddenly becomes very bearish, because technically we're not always long. So how do I then get around? Where do I expect bulls early on if they're not showing up right here? So they failed here, failed to buy. They already got a break even, right? So if you bought there, bought the close, that was your break even. If they're exiting out of the market, here's what could be happening. Here is the 6-bar trading range, okay? 1 to 6, 6 high to 1 low. We could pull right to the opening range, midpoint, and then bounce. So I expect, what do I expect? I expect market to come down a little bit more. But I did take profit. I'm still holding a runner into this, but I did scalp there for the second time. And then I'm looking for bulls to show up again, get us above the EMA. Bar 7 is not a good sell signal bar, so we might actually go back up there again. There's a double top here. So this is a pullback from that double top. And I like to see market actually get us to 52.08. We could actually go reach 52.10, somewhere in between here. I would like to take profits somewhere in between these two lines. But I need to see this bar close bullish, get to the bar 6 high, not fail last second. Because there is technically a 2 legs here is for bears, up, down, right? So that's a 2-legged pullback. If the bulls now close a bar right around there, then they will take over and get above the EMA. If it doesn't, if it won't do that and suddenly collapses, then bulls tried once with bar 9, tried twice with bar 10, then the bears will take and put a proper second leg down. But so far you can see where it's trying to go. It's no mystery. It's trying to get there and close a bull bar. And if they do that, they're going to accelerate above the EMA probably. So then this becomes a second pullback after second leg, then we would be in the third leg. Market could go up the high of yesterday and make a higher day somewhere here today. If we keep going like that. We're right there. They have to decide what to do, not give up. Close that bar, one tick above bar 6. That'll be the stake in the ground. And then we should be able to get to the EMA. But what about we make a double top with bar 7? Anything's possible, right? And bears want to prevent that breakout so that they can get a proper second leg down. That could create a swing down because their goal is to keep the gap open. But I think always in long already started here. So we've got a target there, which is a 20-point swing. So I really would like to see bulls get up there before failing. Yes, correct. Stops down here because we have a breakout. That's the breakout bar, so I'm keeping it there. So this is weak. I don't like this at all. This bar could not go one tick above bar 6, but anyone who bought the close possibly made money one tick. So it's still good for the bulls. Now they have to finish the job. So they have to take out the 7 high with a bull body that will seal the deal. The market is going to go right there. $06.75 is the double top. Bulls are trying to break that double top. So let's see if we can actually test $07.75, $08.75, possibly somewhere in here. Bears trying to prevent the breakout of the 7 so they can get a double top, low 1 and low 2. But we take out the bar 7 high, not going to happen. If we fail and then we get a strong bear close, that would be a low 2 at the EMA. We don't have that yet. So the moment we make a new high from the 7, we're going to hit this area. You better be taking profit. So right around here. We did go beyond bar 7 high, so that's good. So now I want to see actually bulls finish this job. Maybe 1 point above, 08.75, somewhere in between. They're going to start taking profit. Then we pull back to the EMA. If we get a good buy signal bar, I'll enter again. Did anybody sell bar 8 and 9, even though I said this is going to be short-lived, you should not be selling anything? Are you stuck? What's the deal? How are you guys doing over there? You mean low of yesterday? High of yesterday is up here. I think you meant low of yesterday. All right, so my target met 08.75. That's just wunderbar. So let's see if we can actually go and do 11.50. I doubt it, but we might. 11.50 is coming from this right there. Oh, sorry, that was 8. 11.50 is coming from here. That's 20 points. But we might test 19 and then pull back to EMA. So somewhere 10.50. Maybe we test 10.50 and not 11.50, but I already taken profit, by the way. I've is taking profit. If it goes there, that's great. Then I'm going to say, hey, that's a double whammy. We just did great there. But I've already taken profit. So the other machines who calculated from here, you can see the upper wick is the proof that they're taking profit. But it could continue to go up because it is a legit target after all. Beautiful close. We have a really nice close above EMA with an upper wick, but that's by the open, or I'm sorry, by the close, bar 12. So it's trying to go beyond 11 high. It's possible that we would go and test the 79 low, which is one tick above 19.1050. So it seems like it's trying. But just to be clear, I have taken profit. And I'm looking for a pullback. I mean, you can use them. I just don't it's the easiest way, right? If you leg one, leg two, but generally I like to measure, okay, leg two. And for a swing, I expect actually bulls to get to here, but you can measure however you like, right? So and then you would get that. That's a 1 hour. 1.5 is right there. I don't do it all the time, but I'm already giving you the target, so. It is the third leg. So scaling in here could be problematic because it's leg one is pull back leg two, pull back leg three here. So if you should be taking profit and collecting, you should not be going in strong with a bunch of contracts here because I want to see actually a pullback. Now, if we do close the second bull bar here, that's great. That's always in long. I think we were always in long down here anyway, but still needs to pull back, and I would look for a buy signal bar again. The pre-market target area I talked about, which was this right here. So market is trying to reach there, okay? And most likely we will tag there. Or we're going to have to pull back first, but we're so close. So I would recommend you guys to take some profit there. Pay yourself because the pullback, probably buyers will be waiting at the EMA. Perfect. So we met that target as well. Very nice. Some more room to upside. Market. The next magnet is the close of yesterday, which is bar 81 close. But we need to pull back a little bit. So you should be holding your runner. But I'm expecting some kind of a pullback. So this is the leg three. Market could pull into 52.15, which is the 2R targets from leg one, but generally after bar two, we get some kind of pullback. Now, what about bulls showing up here and we suddenly get huge bull bars? Yeah, we could do that. There's a day like this, very bullish, and suddenly we get these bull bars stacking. Okay, I will be buying every good bull close if that happens. But I want to see, the oil report is coming up. I want to see a pullback here because we're at the 20 point and the bulls need to take some profit. But good close, it's okay close. Bar 12 is not a good sell signal bar. It's a profit taking bar from the 20 point zone. But the pullback buyers probably might be at or underneath the EMA. We do have a wedge here, 1, pullback 2, pullback 3. What about getting a huge pullback all the way to bar 9, right? It's the second pullback after leg 2. So when you have a wedge, pullbacks can be all the way here before we bounce again. Sometimes we bounce and then we break and then we come back down to here. Then we have a deep pullback and then we bounce and test the highs. It is possible that we could do that, but there's no sell signal here. So profit taking bar 12 probably will want to come down. So I expect market to come down and test underneath the EMA, unless bulls just surprise us with breakout bars here. It is always in long now. Next magnet is close of yesterday. So we have a breakout of 7 high. I'd put the stop underneath 9 if you're still in your long. There's a breakout test, 7 high. That is 0675. We might perhaps come down there. Profit taking continues. Expecting this line to be tested. Let's see, it's 0675. What about a deeper pullback? It could come down, like I said, bar 9. I just want to see how far it is. That's a 10 point, more than 10 point. I would say is market needs to come down here first, make 5 point, okay, come down 6. Then they can extend selling. Could come down to 9, 10, and then bounce. But if they come all the way down to here, 5, and not able to close a bear body underneath, we could reverse very quickly. That's right around the breakout test area. So if there's a scalp here, but I'd be careful if you're selling, at least get some confirmation first. So if you didn't take any of this trade and you see a pullback here because the 20-point bulls are taking profits, there might be a sell and take a quick profit, but there's not much of a room there. So these kind of trades are dangerous. Just stay with the trend always. Bears need to take out the bar 12 low. Then they're going to push it for 1 or 2 points, but they will take very quickly profit. Okay, so now sell orders are underneath the inside bar 13. Is anybody sells, okay, the close of 13, looking to breach the 13 low, and they want to come down to here. This is their target now, 0575. Either the half R, which is this breakout test area, or they can extend to 0575. So we just tested the half R and the breakout test, and naturally it just bounced. But everybody who sold underneath 13 looking for a 1 or 2 point, right? So if you actually sold this, that is a 2 point. So we could, ATR is 3, so there's a 2 point in there. But in order to make a 2 point, it has to go 225. So it has to go 1 tick underneath 0575. Right? Right now, they just made a 1 point, but it's not 125. So bears are not all that excited about this because it's a counter trade, but it is an inside bar, so it's a good deal, and they want at least market to come down to here. But that's why it's dangerous, because bulls are looking for, they have 2 bars closed above EMA. They're looking for a good buy signal bar from the EMA so they can buy and go higher. Remember I said there will be a pullback but to the EMA, and there could be buyers at the EMA. So they're looking for a good buy signal. But anybody sold underneath 13 or the close of 13, they haven't really made decent money. Anybody sold the close of 13 made money, but anybody sold underneath 13 did not make money. So I would expect market to come down a little bit more. You can also measure, say, from there. I'm sorry. So that's 1 hour. They got the 1 hour. I know you can't see it. I messed that up. So let me do that again. Take that. If you measure, they got the 1 hour. Their goal is to get the price to the 2 hour. If you measure much conservative, you take this area as your stop. So the reason why we're bouncing, because market is not all that bearish, that's also 1 hour. Another way to measure with a small risk. You kind of get an idea what's going on there. If we take out this green line and then suddenly close a bull bar right there, you're going to be in very much of a pain if you're still selling. That's why I said these are dangerous trades, because it's already bullish and the buyers want to buy at the with a limit order at the EMA and continue to make money. So you have a very small window to scalp unless we close the bear bar right around here. Then they're going to push it all the way down here. So these are the trades that I don't like to take. There's not much there. I rather wait for a pullback and buy and run stops. Bar 13 as an inside bar, it's decent. So anybody sold underneath 13 still looking to make money. So we're just waiting for those bears to make a decision here. All right, just about 10 seconds left for this bar to close. Opened at the close of 13, close lower than the close of 13. So that's kind of a follow-through bar for bears, but it is weak. That's basically now leg 1 pullback, leg 2. We're still in the leg 2 of counter move. Breakout test areas holding. Some bulls are already buying the close of 14 because they see a good setup there and they're trying to close a bull bar. So, and then you put a couple of ticks underneath as stop and entry, 1 hour, 2 hour. So let me see if I can, if you are a bull. Actually, stop should be down here. So that would be the 2 hour target right there. Actually, stop should be down here. So that would be the 2 hour target right there. Two hour from the leg 1 is at 15.25 for bulls. This is not a good buy signal bar from the EMA. Most likely we will come back to the EMA once again. So I will look to buy. But limit buyers bought bar 14 thinking it's okay, but it's not a good buy signal bar. So even though we hit the 2 hour right there, we're probably going to pull back again unless it accelerates. But you see why it was difficult? That's a 2 hour from the breakout test entry. Actually, I'm wrong. That's 15.75. Still the target for bulls. We went above bar 12, so that's good. So technically leg 1, pullback, leg 2, pullback. This is your leg 3 now. So leg 3 could extend all the way there. Then you can measure possibly is from here to there. That would be your target. Blade is from here to there. That would be your target. So shallow targets is also around the magnets and the actual target from leg 1. And we are very close to my pre-market target before the market open. I said that we're probably going to try to get to here. And that's what might be happening right now. So we could go above is high of yesterday. So we could get a second leg up. So market could become very bullish today if we can keep closing bull bars. We do have gaps, right? Gap here from here to there, from this high to that low, but we're in this range. So we need to take out these highs. Okay, then we would have a big measured move to the upside from this high to that low, projected to up, but the bulls need to keep going higher. Can markets start to swing down suddenly? I don't know. I mean, it could. If we cannot take out these highs, we could start to come down. But so far, so good for bulls. Pushing higher. All right, so we reached my target area on the Globex. I said we would get there is if we start to see strong bull bars. Gap stays open and the markets continue to buy. So good for the bulls. They're trying to target the prior highs. So they're probably trying to get to the Globex high at this point. Globex high is, there's a double top here above this high even. So the market could continue to push higher. 1575 is your first target. Measure the small, and then that right there is your target. And then that right there is your target. Could go even higher towards 52.29, 52.30, which is above high of yesterday. It's breaking out. It's the biggest bar since this bull trend started, so we do need to pull back a little bit at least. You can see that they're taking profit here. First of all, I would not vote here. If I were to buy, that would have been above 15 and my stop would be underneath 14 because that's a breakout, right? I already measured it earlier. I don't know if you paid any attention to it. So it just went up. Then you could say, hey, I entered above 15 or to close, stop below, then you can go for a 1 hour. And they're taking profit there. Could go higher, but needs to pull back a little bit. If it keeps going up, then your stop is here. But when it's this, in a bull trend, you're kind of entering late right at the magnet. There's not much of a, so you're in a scalp. You have stop here, you're looking for a scalp. But even then, your stop and your entry, your reward is bigger. Okay, so this is actually a good entry, but you have to take profit. There's 11 o'clock news. Flip Jefferson. If the Globex bar closes bullish, market will continue to go higher. It breach above the Globex high probably. But they're taking profit because it's magnets. Close of yesterday is also the target. I said it's an important target. Is there will be profit taking, but there's room to upside still. I like to see market at least come down to like 11.25 area. But if they don't want to, then they can keep going higher. This is the 1R is opening range measured move right there. So that's also target now. First 6 bars, this gray area projected up. Market has been in a bull swing since around, I believe, 8:45 a.m. So it has made 3 legs up, and the last leg is complex, two legs. So I like to see a pullback here, but I think there's still room to upside, like around 52, 18, 19. What is this? This is 19.25. Gapped up from the EMA. Some bulls will look for a pullback, maybe several legs down. But buyers think that this is leg 1 pullback, leg 2 pullback, already leg 3. So we're stalling here. If we do come back, there will be probably buyers above 15 or lower third of 16. You have an outside, and then you have an inside bar followed. 16 and 17 is we might need to come down and test the 17 low. Might come down to 12.50, perhaps around 52.12. I think the buyers are waiting there at the lower third of bar 16. Inside bar 17 is after several legs up. So market wants to come down, but there's a breakout point here. So we know there are some buyers waiting there. And even if bears bring the market down, bulls will try to track those bears, trying to get a breakdown from under bar 16, which is outside up bar. So I like to see bears actually try and then get slapped somewhere at the lows of bar 16. They know they may not have too much of a space here, but what about the swing bears? Now, bulls failed twice closing above close of yesterday. That's a problem. Can today turn into a major sell like that lasts long time, and then we actually take out the open of the day tick price? It is possible, but you want to see bears actually move underneath the EMA and then break this breakout point, okay? Then you look for a pullback to EMA. Then you sell at the EMA, a bear flag. That'll come down with a spike and then 3 wedge top formation and then have another leg down. So market could sell like this. Hang on. It just needs to come down to EMA. Then it's going to bounce a little. It's going to move underneath the EMA. It's going to bounce towards the EMA. Then it's going to come down. Okay, everybody else is going to buy this, thinking it's going to go right back up. Only you're going to get a nice several bear bars separating from the EMA. That's going to create probably 1, 2, 3, and double top, and then come back down. So we could end up coming down to here because we left it behind. Is bears are not happy. Bulls are not happy because they probably had a bunch of buy orders there, so they ended up buying too early. If we get this kind, okay, we're going to go way beyond bar 1. If we get this bunch of bear bars moving. Now around in a minute is you got the Philip Jefferson, the Fed member. It's about to make a speech. I don't know what he's going to say, but algos are listening. Now, if we don't get those bear bars, meaning we don't move underneath the EMA, we don't need to worry about it. We could just keep going higher, and the market could reach a new high of day above high of yesterday. So I did talk about that. Selling, it just needs to form. So so bulls failed on the 15-minute chart closing above. They're trying again, but if this fails and we get a rejection, we can pull back. But again, I would be careful here. I would want market to really come down to the EMA and move underneath the EMA before I even consider selling and expecting a couple of hours down market. If you sell below 17, you're stuck inside outside bar 16. So what do you think is going to happen? You got a couple of points, but it's a very uncertainty. Trading this kind of, you're basically expecting these lows to be tested. That's your game now. So that means you have to scalp when market gets down to the lower third. So you can actually measure this bar. Your lower third is, we already tested the lower third, by the way. And there will be limit buyers waiting, right? Look, that's the lower third, 33%. We tested it and the buyers immediately showed up. I did say we're probably going to come down to the lower third and we're going to test it, and we did that. Okay, so now we go back to the upper third. Bulls close a bull bar, they will then try to take out the high of 16. I don't have projected target lines, but you can use the other template that I use. Or I simply use this because this is the mother bar I called. When an inside bar follows after a mother bar, outside bar, that's a mother bar setup. So basically what I'm looking for there is if we test this area, okay, and we close a bear bar, we come down to this area, there are buy orders, then you expect market to go above it. These are the first shallow targets. It'll probably going to come down and then keep going higher from there. So you have a very limited trade there, and that trade is basically if you sell 17, you have to measure the lower third and expect buyers to be there. So we're going sideways in a trading range, but it could break out to the upside. What about bears? Can they actually sell? Well, how would they sell? How would you expect a breakout? Well, you see this right here? If we close a bear body, then they're going to try to take out the low, but that is going to be a trap again. So the bulls are waiting there. The trap is right around the low of 16. It could come down, but if this closes bearish, that's fine. You still have a scalp all the way down here, but you have to take profit somewhere here, because by the time it gets here, you don't take profit. Bulls are waiting to trap those bears. So you're in a limit order market now, right? It's limit order sellers, limit order buyers. You're stuck in the outside bar. That's why I call it a mother bar. Okay. So it takes several months for that baby to born, right? It's like it takes several bars for us to get a breakout. That's the whole thing. Kind of developed this after is long time ago watching Al Brooks's II, IOI, OO, OII. There's bonus videos. There are two of them in the bonus section of the course. Is because I like to measure stuff. I like to know I like to 100% know exactly what price point the buyers and sellers are waiting. So you see this 2 dash line red? They're a little faint, but they're there. I know I can sell from there and scalp all the way in here. I know I can buy here and scalp all the way up here. But it's a scalp. It's nothing more. You cannot expect a lot more. So now, if the bears do close, I know you guys can't see it, but let me adjust it for you just to be a lot better. Where is that now? Now I forgot. And that's that. Yep. So I'll make that 100. And then that's 66. I'll make that 100. And I believe that's that one. Yeah. So I did sell here, by the way, as I was talking, and I just took profit there. That one, and then 33. See that red? This is close of yesterday. Don't pay attention, but this area to that area, right? So now, they close a bear bar. They're going to try to threaten in the low of 16, but buyers are waiting there. Now, what about this turning into one big bear swing all the way to bar 1 low? Like I said, it is possible. However, you need to see bars moving below the EMA, okay, like this, moving below the EMA, going back to EMA. Oh, then I'm selling this. And I'm going to look for first pullback, move underneath, right? Second pullback, as the EMA comes around, gap, right, comes down, trap goes up, everybody else is buying, I'm not buying, I'm expecting another swing down, all the way to the below bar 1 into the area of interest down here. But that hasn't set up yet. But look what just happened there. See that gold line, thin gold line and a thick gold line? Thick gold line is the low. This is a trap zone high within the range. This is the trap zone low within the range. So basically, when I'm trading, right now I'm not trading, I would have took profit. I sold up here because look, we hit the trap zone. This is the upper trap zone. There are sellers waiting. So generally, you can even put sell orders, bunch of sell orders here, here, inside the red zone. Whichever gets filled, then you're selling, okay? As it gets down here, you take profit. If you want to buy, you can start to position buy orders here, here. These got filled, they didn't get filled. So as this goes up, you're scalping and leaving a runner until we get a breakout decision from either the high or the low of bar 16. If you master this, there is a trade 100% that you will win. Maybe, okay, say 99%. There's no such thing, 100%, right? It's actually a higher probability, 80 to 20%, right? High probability scalp there. But scalping is not easy. I had to learn things and develop things to really clearly see where can I be a limit buyer and scalp? Where can I be a limit seller and scalp? What are the conditions that I shouldn't be buying here? Okay, and wait for bears to get trapped, then I buy and hold it into the mid-level, take profit. If the bulls close above it, my runner is running all the way to the high, perhaps to the breakout targets. But you just sit there and you watch, let the game unfold so you can tell, what you should be doing and what you shouldn't be. So that is a lot of observation of Al Brooks' methods on live charts. Then I take what I learned and then develop these small, like game-like rule-based, okay, techniques, and I trade with that. There's always a trade. So, and I think that what makes traders good traders, when you take something, a good methods, proven methods like Brooks price action, and turn it into a good tactics, right? That you can trade. Like right now, right? We're still in the trap zone. That's still the trap zone right there. This is still the trap zone. Can I sell this? If you haven't sold up here, you have no business selling anything here. First of all, you're way too close to EMA. So by the time you sell it, they could trap you and go right back up. So you have to be careful there. So here are my levels. If you want to copy them. Didn't I just save this and I changed the colors to 100%? Why didn't it do anything? This is annoying. I just saved it. I'm sorry. I'll do this again. Must have done something. But anyway, those are the red areas. Those are the limit areas. I call them limit zones, where sellers waiting is buyers waiting. But bar 20 now broke that limit zone with a bear body, right? So where do you think it's going to go? It's going to go and test as low as possible to the lower part of the trap zone. Look, there were some buy orders here, but are they strong enough to move it into here and perhaps up to there? That's the question. Is I sometimes, like, I see something like this. Okay, there's no bear breakout here. Bears are not doing good. So bulls probably buying here, hoping to bring it at least to the 33% or 21%. So I sit and wait, right? Because what it can do, it could just go up there and sell, or it closes a bull bar, then I know it's going to go up here, could go even further up. Then I can buy. But if it closes a bear bar, taking out this outside bar's low, then you have a breakout. Then the market will continue to extend selling into these levels before reversing back up. Sometimes I don't take the trade. I wait for it to come in here. I have orders waiting here. And then as they're taking profit, I'm buying against it, and I make a very quick $1,000, if not 500. And then as they're taking profit, I'm buying against it, and I make a very quick $1,000, if not 500. And in the meantime, count the wedges, right? So here's a leg 1, is pull back, leg 2, we're probably going to pull back. We could make a leg 3, and then everybody else will buy. So hopefully you guys have taken profit there. We have failed second time trying to close above the close of yesterday. And trapped everybody coming down. You could have sold underneath 19. You would have had probably a nice measured moon target there. And that's where we're probably going. This is the first shallow breakout target. If we close a bear bar, market will continue to come down. But then everyone else will take profit. We're going to pull back to the EMA. If we get some kind of a bear flag, I will sell. Gap down goes up, right? So then it starts to sell. Although this is a very shallow double top right above the EMA. So that's not really us, but and I don't think this is what we're going to have today. So we're just going to come down, go back up. Then we're going to get really big gap bars. And those gap bars will start to create a small pullback bull trend, only to go up, and the market could sell like that. Okay, so I'm trying to find that. For you. So give me a second. I'm probably looking in the wrong place. What about, oops, I just find it. What about a deep pullback to EMA and then the bulls do show up? Look, we just met the first target. So now, if we close a bear bar, we'll continue. If we fail, we're just going to reverse back to the breakout point, which is bar 16 low. So we already broke. Look, it's already. So this time you take profit and you're in your runner. And your runner is going to the next target, which is right there, second breakout target. And this is the measured move target of the outside bar, or I call it the mother bar. But at this time is, if you're still selling, suddenly you see this bar closes above this line, you have to take your profit and exit out because it could just bounce very quickly back up here. But if it closes, or it just gets down here, is before closing, then you take profit there and move the stop down as low as possible. So before it reverses back, you don't give back too much, okay? But right now you're holding into there. Now, what about trapping the bears underneath? Hold on, I lost my, here we go. Trapping the bears underneath the EMA is, and then going back above the EMA and becoming bullish suddenly. So is something like this, okay? But we are already below the EMA. We haven't really gapped down, but we could do this and then turn around and go right back up and make a new high today. So let's see how this unfolds. It's right now coming to the next target. I have tested this over the years, y'all, so this is actually pretty high probability setup I use with, if you want to learn about this, please go to the course, okay? It's in either the Forex or trading price action. Go to the bonus videos and watch these 15 and 16, and then you'll know exactly why Rose is measuring like this. It'll make all sorts of sense. Okay, we could get something like this, but we have 1, 2, 3, 4, 5, 6. Leg 1, pull back. Leg 2, pull back. We might get another leg, I don't know. Or there's a gap here, so it's leg 1, pull back. Leg 2, pull back. This is already the leg 3. So you see, if you didn't take profit, then you didn't listen to me. You didn't believe me, you didn't trust me, and now this went against you, and you gave all of that you made back. Yeah, that's actually a good observation. Yeah, I could. I know, I like to prolong things. It's just, I love teaching, and I love trading and teaching, and I don't know, it's always been, I enjoy it. My brother is the same way. He's actually assistant professor in university in Istanbul. We really do enjoy doing this. My father didn't want me to be a teacher or anything other than a doctor or anything. You know, he's a construction engineer. So he really didn't believe in anything. If you're not a doctor or a lawyer or engineer, basically you're just nothing. That was his thinking. And meanwhile, I'm going to be an art director. What is that? I want to be a teacher. He didn't allow me. And I would have really be a good teacher probably in some high school, maybe in the university, but this was my calling apparently. It's just that I love it, and I don't mind staying longer. Anything I can pass through, you guys, and makes you a better trader or keeps you in the trade longer, then I meet my goal. Anyway, I'm going to remove this so we keep a clean chart. This is no longer my target. Well, you can still use that, but it's a deep pullback. It is also a cup here, so it's a handle, but we don't have a gap bar underneath the EMA. Can market fail here and go right above the EMA? It might. If we close a bull bar, then I will measure my 1R and 2R target, and that'll be like this. So say this bar closes bullish or closes right here, then my risk is going to be, I know I could do this. my risk is going to be, say it closed right there, then that's 1R, 2R is, I'm going to try to scalp that. But I have to wait for this bar to close first. No, he didn't. He has no interest in moving here because he knows his big sister is making the money and, you know, pretty much sending everything to him. He's got a better life in Istanbul. So I've tried to get him over here, but he wasn't really interested. Okay, so today is we could dip a little bit. This could be us, bull trend day, right? So, or maybe like this, come back again. So we just need to get above the EMA. We need to trap the bears underneath the EMA. I don't want to see gap bars because once we get the gap bars, the first pullback, bears will sell. And then we're going to come down and then we're going to buy again, make a wedge bear flag, and then swing down again. You do not want to see that happening. So, but if we start to get above EMA, then that's good news. I'm going to start to buy again. Problem here is that we have a gap now. There's a gap form. If bulls close this gap, then you can just measure again, expect these highs to be tested. So you want to see a bull bar actually is cutting across that, right? So here, let's measure. I mean, I'm going to be measuring pretty prematurely here, but let's just measure, right? You want to see market actually close a bull bar around that green line, and then it will target here and perhaps further up, but I think it's going to go up and then come back and then go up if we start closing bull bars. But I'm just prematurely measuring, so you shouldn't be doing that. Wait for the bar to close. Okay, so that closed. I don't know if I did measure right. Bull's now probably going to try to get a 1R here, and if not 2R. Maybe even 3R, the prior highs, whichever comes first. And they close that gap, you can remeasure for better targets if they close the gap. If they fail to close the gap and this becomes a bear flag, then you know the bulls are not that strong, and suddenly we start to print gap bars, right? That's going to sell all the way down here and then go up, come down, go up, come down, and then finally get back to the EMA only to swing from the EMA. So right now, bulls trying to prevent that. So they need to close this gap to take control over the market once again. So that means you got a 1R here, probably a good scalp, and then 2R, which is almost equal highs, or we might even go further up. Only if we actually close this gap. Failure to close the gap, then there are no bulls here. So I did buy, and I'm looking for 1220. Actually, I'm wrong there. 1325. I'm going to scalp one tick below 1325, and then I'm going to leave a runner. But it could fail because bear's trying to prevent, so I'll know is that bull's got no game here if we suddenly move underneath the EMA. But bar 23 is a really nice bar, except that you're buying against the micro bear channel there. So I might have a good scalp opportunity. We're already at the half R. Some actually take profit there, but I think it's just too early to do anything. Take profits. I'm just going to wait to see if we can get the 1R. Bar 23, a bar body, 100% of its body is above the EMA. So that's a good buy signal bar. You can even measure from there, right? So if you measure, if you bought there, you put your stop here, that's your 1R. But I'm going to go with the initial risk and see if I can get it. Then my runner will get a life out of this move and keep going higher. Okay. We did not close it. We just tagged it. There are always sellers there in the gap. That's bear's job to prevent bulls from going further and making a 1R. If you cannot make a 1R, that is an indication that buy orders are not all that strong. But we don't know yet. There's still 21 seconds here. You don't want bears to take this area. See, that's failing. But we don't know. It comes down to the 50% of your risk. And if it holds there and goes right back up again, I don't need to worry about it. And if it holds there and goes right back up again, I don't need to worry about it. Many will buy there is at the 50%-ish and then bring it up to where they entered and break even before it comes down. So if I measure it, let me see, if you entered there, so you buy there again, and then you're hoping to break even because you don't like what's going on here. So you're hoping market to get back to where you entered. And then you break even there. If the bar closes bullish, then you don't have to worry about it. You can hold it. But you see how that worked out. So you don't panic. If you want to see these highs taken out and market to make new highs, you want to see this gap close. There's another gap here, I think, but it's so weak. Probably nothing there, but it's just going to have to close this gap to become more bullish again. If it fails for the second time, then I'll wrap this up because there's a chance that we could suddenly move underneath the EMA. But so far, so good for bulls. I just need them to finish the job. And just give me a 1R. And that's a very conservative 1R. Yeah, I should get that. I'm at 13, one tick below 13.25. So is this now a double top, micro double top bear flag? Are the bulls failing here? Are we gonna not be able to become bullish for the rest of the day? Up on this, down on this, up on this, down on this. It's very difficult to count, but you can say up, down, up, down. We just need to go one more time, I think. Or you can say it's up and down with this bar, up again, down again, up again. So there's already a micro wedge here. And it could become a bear flag if bulls fail to close this gap and get to the 1R. Okay, this is their last chance. You do not want to see a micro double top and a lower high bear flag forming here. And the bears can take out the bar 23 and 22 lows very fast. So this is last call for bulls to close this gap and get to the 1R. If they fail, I'm going to exit and I'm going to look to sell. What's going on with the news? And then 1 o'clock is 10-year note auction. Last call, and Bears are trying to get a lower high and swing it back down to here, if not more. So we have a double top there. Double top there is I. So you have an I, right? We don't have II, but it's an I. And then it comes down, they trap, go up. So that ended up becoming actually a wedge top. 1, 2, and 3, bear flag, or double top, low 2, and you sell. But it's very climactic sell. It's a second leg down. Probably buyers there, so it creates a trading range. What does a trading range do? Goes to the 50% and above, upper third. You want to see a test and sellers to show up again. So this could be also in the play. So let's take a look at what's going on here, right? This is the first sell, trapped bears is first buy, and second sell, trapped bears, second buy, but you're buying above a bear bar, not a good idea. So if the bulls now close a bull bar, bears will exit out of the market, and we're going to go to here, possibly up there. But if they close a second bear bar, so you could say first sell, I don't think they will be able to. I think this is failed M2S, second short from the EMA, moving average, and is first long, second long, but it's just sideways at the moment. So market needs to decide what to do. And it's lunchtime, so we could come down, we could go up, we could go sideways for a while. I'm going to open up the question box and go to webinar if you guys want to ask some questions. Bears see a bear flag here, is legit bear flag. Double top is and lower high, market double top and lower high. But bulls are still holding. They're disappointed. It went back to where they entered, but they couldn't get a bull bar. So this is their last chance. If they fail, I'm not going to linger in this. Kind of got the idea. This is just too much on the chart. I think market has decided what to do. Do we turn this into a bear day? Do we turn this into a bullish day? Continue the bullish trend? If you notice, we don't have 2 consecutive bear bars underneath the EMA, so we're not really always in shorts. Some will say it already started, is always in short, but we need 2 bars closing below the EMA bearish. Closing below the EMA bearish. Some will sell is underneath bar 26 with a stop above 25 and hoping to take these lows. Bulls failed here, so they already sold underneath this bar. They're just trying to get back to here. So I am out. I'm out. I'm not going to wait for it to come down and hit my stop. So I went flat. Could have taken profit there. I really didn't. I just held it, but I'm going to wait. I'm not going to sell here because probably buyers here trying to prevent and get a double bottom at the EMA and reverse back up. I think we're waiting for the Susan Collins in 11:45. Bulls might get a chance here, but I because it's news, it's coming, it could also dump, and I don't want to take that risk. So I just went flat. It didn't really put a big dent on my P&L. It was only one contract, but this was a loss. So I'm going to have to trade now more to make that loss back. I think the bears are trying to get to 52.05 area now. So this is done. But it's also double bottom is at the breakout level. So they really haven't closed the bear bar. Target is 05 probably, which is right here, the opening range high. But I also did not sell because it's just too close and there's a double bottom. So this turned into, you see what just happened there? You could have exited right with that bar. I exited with bar 27, little bit underneath bar 26. So before it reached all the way down. And as soon as this started to close, I knew the bears were going to sell that because we never closed the scalp. So you had actually a trade there with a stop above 1 hour, right? But it can go for even 1.5, 2 hour. It's just that this area is support. They're trying to break it. But it's also news. Once you see the gap is still open, then there's no need. That's also IOI and the bar 26 is the last eye. Close on its low, you know it's going to come down. So it's also outside, inside. So we have a break below the outside bar 25 low, and bears are selling. So if you were to actually measure this, the earlier example I did, you can find your targets if you're selling. Pardon me. Okay, so that was the shallow, but that's never my target. I always go for this one down here. So is pull back. Why did we pull back this much? Because look what happened. This is a breakout bar, took out the 25 low, reached a shallow target. But how do I know this is going to pull back so much? Bar body never closed below the first target line. If it were to close here, it would have gone here. Look, it came so close, but it never tagged it. Why didn't it tag? There's a reason. Bears know that they can't go any further because they failed to close. So they have a scalp here, not swing. And they know that this is going to go right back to the breakout point of the outside bar. So if those bears disappointed, probably going to sell here, wanting to bring it back down so they can make money with the runner that they were holding. But in the meantime, this can actually go into right here and then sell from there instead. Oh, sorry about that. Okay, so it did go there. Look, there's some sell orders. It just hit. And now let's see if the bears will be able to sell there. If they close a bear bar, then I'd be interested in selling. But if they fail to close a bear bar, I'm not selling because then it's going to go right up to here. See, those are the things that I've studied, and I know exactly how they're going to turn it around and make it into a limit buy, trap the bears, because those bears did not close below this line. So they're never going to hit here. If this were to close here, I would have said, okay, this is my target, and then I would look for follow through here. But now everybody else is holding, and those bulls, they know now they can trap you. But now look, if those bears are trapped, what do you think they're going to do? They're going to come in here. This is the limit. Since we broke the limit area, now you can sell when it reaches there. So if you actually sold, say you were still selling, right, maybe you sold here, you were still selling here, you got stuck here. You sell again somewhere in there, you break even right there. And if it goes beyond it, you're making money. If it fails to close as a bear bar, then it was nothing but a break even for bears, and it closes suddenly bullish bar after giving you a break even. You exit and you look to buy. So if they close a bear bar, then it can have another run down to this target and that target. But otherwise, it just gave you a break even, did its work. Now the bulls close a bull bar above this area, which I call limit. Then they will buy and they will bring market there and then furthermore up here. Then those bears didn't do anything, will be forced to sell yet again there and try to exit until we get a breakout from this outside bar. This is the range we're in. We got a breakout from that range. We got a extension selling, but it only hit the shallow target and didn't close below it. So no follow through. So you are forced to sell with a pullback to break even. If the bar closes bearish, then they will swing down to these levels again. If it closes above, I call this a threshold zone, which is a limit zone. If they close a bull bar, then we're going to go test there. We might even go all the way here. And before we reach there, no one will sell once again. So you have to practice this. But if you learn about this, then you practice and you learn. There's always a trade. You can fix anything. Because anybody who was selling is, hey, this is a beautiful bear flag. I'm selling. We even have a gap open. And then just came down. So I should get another leg or so. And then they get this and it moves up so much. They're like, oh no, what do I do? Well, now you know what to do. I don't go through the funded account challenge strategies here in this trade room. So I'll probably connect with you, Edward, after the session and talk about what I meant to say in there. Basically, I'm talking about risk management, how many contracts I use to trade different kinds of accounts. So that's what I was talking about there. Okay. If the bears get another chance, okay, so bar 29 closed bearish outside the range of 25. That's good for the bears, but now they need to accelerate and sell. So limit entries right up here yielding good results for bears if you utilize those levels correctly. Yeah, actually, I did make some videos last week as I was just laying down and trying to recover. I made videos, but I didn't post them because I have to edit them. I made some videos in Sim, how I trade these, measure. They were not real trades. I shy away from posting, videos with Sim trades, although every video has a description of where I traded, whether it's a sim or real time, whether funded account, whatever. I have to make those statements. People need to know. Otherwise, it won't be honest. But I still shy away from posting, even though it's educational, it helps people practice and see. But there's always somebody comes around and just makes a comment and points out the most obvious thing, like they just discovered that I'm trading sim. Yeah, it says right there, I am trading sim. You just don't read the description and pretend that you pointing out something. But people will do that. I just don't like to deal with that kind of thing. I will post it. That's why I don't make my YouTube videos public to anyone, only for Discord members. If you are a Discord member, you will have access to them, but the public won't get access. I don't care to make a name for myself, ever. So I did make some videos. I will post them, and I'll post a notification on Discord so you know. I wasn't trading last week, so it was nothing but sim, basically. I don't post them here. I post them on my own Discord. There's a dedicated channel. All right. What do you see that is lacking there? That bears are still in trouble. Bar 29 did not take out that line. First try, second try. If this bar closes like this, it could become a second trap for bears. So they have to push this bar 30 and close down. If it fails, it's going to trap the bears for the second time. First try, second try, then we'll go up all the way here, possibly to here. Oh, sorry. Market, remember what I said, market could make a bear flag come down is it actually separated from the EMA with 27. But no follow through with 28. That's a problem. Then it goes back to the EMA. If we get those follow through separation bear bars gapping down, then we will come down to this target, possibly this target, before reversing back up to the EMA. But 3 times market will try to go, with the 2 times being the gap and then the 3rd time testing, then you will get another swing. And if that happens, best believe is we're going to come down here. We're going to test below bar 1. But it has to set up. So this is it. I'm waiting for this bar to, okay, failed again. But at another bear bar, okay, all right, they're selling. That's good. I was going to exit. I did sell finally in here, and I took profit there, and I had a runner. I almost was going to exit because it didn't close below this line, but then they just sold. That's great. Now I'm holding. So I'm holding into here. But still, it's not good. It just needs to close a bear bar below this. This is not good. Now we're getting a wedge. 1, 2, 3, triple bottom. If this bar now closes, I'm going to be exiting. If it closes like this, I'm going to be exiting. It was nice. I got excited, but still I didn't get anything. So my runner didn't run. I sold here with limit, made money, but that is a dud. So now I'm going to exit. If this bar closes bullish, I will exit. Or if it hits my stop, I will be forced to exit. My stop is above the 50% line. If I exit now, I could give back a lot, and then it will close us down below. Last second, there's still 3.5 minutes. But bulls closing above this threshold is going to be a good sign for them. This is the threshold, 33 to 21. When they do that, they're going to go and test right there. Some bears will sell there again, but if a good bull close, it could take us to the upper threshold right there. Outside up bar, but it hasn't really closed, so we don't know how it's going to close yet. And bulls are trying to close above the EMA. That would be good for them, because that would be a failed low 2 here, low 1, low 2, or low 1, low 2, low 3. And if they can close a bull bar, then I would expect them to test and get above 50% and go into this area, and then perhaps go and test these highs, the outside bar high, bar 25 high. But that's not given yet. You kind of have to wait because that decision has not been made. Still holding this area. It closed inside the range now, but it didn't close a bull bar. So now this bar has to close above the 33%. They do that, then they're going to go and test the midpoint. You have an inside bar 30, outside bar 31, and inside bar at the moment 32. If bulls close bullish, there will be buyers. But decision is only going to be made for buyers if we breach this area and close a bull bar. Then we will get above this level, go inside this level. Probably some sellers will be there. But if we fail to close a bull bar, suddenly close a bear bar, then they will sell again. It's right now sideways, but more bullish than bearish. So if I would do anything, either stay flat or I would go long with a tight stop though. In a situation like this, it's better to stay flat. You just wait for the confirmation. You see this area is taken out, then you can go long. That's when I would decide to go long from the lows, and I would target the highs. That decision has not been made, so it's better to stay flat. Our official YouTube channel is the Brooks Price Action channel, where is Brad, Al, and Richard post. I just didn't feel like creating it's a private channel. I needed to post somewhere the videos so I could house them on Discord, because I cannot post large videos on Discord. So the YouTube is basically private. There's only 1 or 2 videos that are public, but the rest are private. I just created a list, but no one can see. No one can see. So bulls have not yet showing me is any threshold build up. So I need a bull bar closing above 33%. Bears still holding the EMA. They see a micro double top, low 1. They're trying to get another sell. So they have to close 32 on its low, as bearish as possible to sell. We don't know. There's 1 minute and 37 seconds. If bulls close a bull body and you sell right now, they could trap you and it could go up here very quickly. All of the videos are basically in silence, so there's no audio. It's just a background music, but the new ones have audio. I'm actually talking about how I structure my trade and what I'm looking for. Mostly using the mother bar technique, which is L's, IOI, OII, or II, OO. All right, I am done with my session, everyone, and I gave you guys what could happen rest of the day. And let me delete all of this. Is what could happen rest of the day. So you can see that this is a bear flag, failed to break out, and another bear flag. So it's trying to decide what to do here. Is if the bulls start to close above EMA, we're going to go and test bar 25 high. Okay. So is problem here now we have another outside inside, plus this outside bar had a breakout and reached one of the targets, so this is no longer valid. So you should be now measuring this. Okay. So that's what you need to do. This is now your new outside inside, and you got the inside bar right there. What are you looking for? Well, look where you are. That's the threshold. They're already selling with limit orders, but if this bar closes bearish, then we're definitely coming in to here, probably buyers waiting here, maybe even down here. they're going to try to trap again until we get a breakout. If it goes and closes bullish, we're then going to go up and test that high. But you see what just happened there? That's the limit area, and they sold. Now, what if we get a breakout suddenly? Take out the 31 low. Then this is your target. That is your target. We can even swing all the way down here. But, okay, so we're about, okay, look what happened. We just tested, immediately buy orders. It hit buy orders. Why? Because it's the outside up bar. It's bullish. Bulls are trying to prevent a breakout. They're trying to reverse it back up. So you're always going to get those. You never get, it's very rare to get a clean breakout is from an outside bar, inside bar range. Generally, you get several traps before that breakout happens. So it's a back and forth trading. The reason why I'm drawing that, I'm trying to get your eye to it. How does that work, right? So that is right there, hit a trap. See? You thought you were selling this and coming down. But this area is the threshold. This area is the trap. So it could come all the way down. As you're selling, it just traps you. So many machines actually put buy orders there. They actually lace the whole area, starting from here, all the way down to here. Whatever is activated, it bounces, they start scalping. If they start to see bull bars closing above midpoint, they hold into here. Then they see bull bars closing, then they hold into the upper trap zone. But the bears are waiting there to reverse it back down. If the reversal does not breach the midpoint, then the bulls will start to swing up. So to study this behavior or phenomenon, and then you'll be like, oh, I can trade this. Now I know. I'm never going to be a trap, okay? I'm never going to be in some trap that market makers set up there. So you learn how machines are trading this. These levels are not traditional Fibonacci levels. These levels are tested long time, years, is that I have studied the behavior and understood what the machines respect. So I came up with all those levels. But you don't have to use any of them. You could just use the 66% or 33%. It's just that your trap zone is huge. But this gives me, some may say, hey, this is overkill. I could just use L's level 66, 33. They're there. So you can use them as well. Anyway, I am done with my session. Market is going sideways. We have not separated from the EMA. So if this flag fails, we could go and finally make a new high, go test these equal highs. There stops sitting there. Bulls will then run those stops, come back down, and then we could become bullish again. But if we start to see bars separating from the EMA to the downside, that's fine. This is second pullback or first pullback, second pullback. That's a wedge. Now wedge comes down and tests here. If we start to see bars coming down, expect this area to be tested, bar 9, and then you look for pullback, look for gap to stay open, another one, look for gap to stay open. This one makes a higher low. Then we get above the EMA. Everybody else start to buy, you sell with a good sell signal bar. That could then swing all the way down to here. Okay. All right, bye everybody. I will see you guys, I think tomorrow. Let me check the schedule. Okay, I will see you guys, I think tomorrow. Let me check the schedule. Yep, tomorrow is 9th, so I'm on again. Then Tim Stout and Brad Wolf come in on Friday. All right, bye everybody.